Hey, what's going on, everybody? Good morning. This is Carlos, CEO of GAR Capital. Welcome to our morning note. It is 8:55 in the morning. We usually start about 9 a.m., but 5 minutes early. No big deal. Let's kind of talk about what's going on in the markets today. Futures right now up about 120 points in the Dow, Nasdaq above 53, and S&P up about 0.5%. Pretty good. Russell about up 0.38%. VIX is down about 3.8%. Bitcoin up very nicely, up 4%, 93.60 currently. Gold futures are down about 0.5% at 1701. Silver is up about 0.79%. Bond yields are down as well. Bond yields are up, bond or prices are down, and dollar yen for you forex traders right now is at 106.15 dollar yen. So let's kind of go over what's happening today. A couple things I read this morning and last night. Looks like the drop that happened yesterday, you could see here in E-mini futures, was due to Fed Governor Clarida talking about that more stimulus will be needed. Looks like it just was an excuse right around 28.90 for the algos to reject this resistance here. So that's kind of a number you want to look at here, guys, moving forward. 28.90, which is right about 18 handles from current levels at 28.72. A nice rebound overnight. We had one more leg down and hit kind of, I guess, that support, if you want to call it that, because it's not really support yet. 28.42-ish, but the real support was really around 28.32. But it is kind of following that trend line to the upside. I mean, we just had some numbers come out from ADP, which is private payroll, about 20 million jobs lost. It's the highest number ever recorded on ADP. I mean, we know the fact that this quarantine and what COVID is affecting affecting the world and the economy, but the stock market isn't reflecting that. So you gotta have to understand kind of the parameters, and what I've always been saying and preaching is that the stock market is not the economy. It's almost forward thinking. So I think what stocks are pricing in now, guys, is really the best case scenario moving forward. You know, Starbucks is reopening, a couple of states are reopening, certain cities are reopening as well, bars, gyms, restaurants, and barbershops, what have you. So, I guess you could say we're kind of turning a corner, but here's the thing: even if we do open up, we don't know what the ramifications may be, but at least we're getting there. So the administration is really pushing reopening the economy more than anything, and it looks like the rhetoric in China with the COVID virus being started in the lab in Wuhan has kind of subsided a little bit. I mean, haven't read a lot of headlines on it. That was kind of the big factor to me to be bearish this week, but we've had 2 green days consecutively, and it looks like to be a green day again. So again, what you're seeing is really just a disconnect from Main Street and Wall Street. That Wall Street tends to be more forward thinking in a sense that things are going to get better. Right now we're in the cusp of the worst of it, and Main Street is like, the hell, man, we're unemployed. What do we do? But can I say the worst is over? I mean, yeah, I think we may have some drawdowns here and there. I think, we could hit around 2,600. I don't think the March lows around 2275 in the S&P or 2300 is going to hit again. I think that kind of ship has sailed. But looks like the Fed is talking about more stimulus moving forward. What more can they do? They could just print more money. I think the last kind of trick they have in their bag is to buy some ETFs, actually buy stocks like Japan. It's unprecedented if they did that. I don't think they will, in a sense. I don't think it's possible, but I mean, that's a pretty big bazooka. So we really have to see a lot more downturn moving forward. But that's where we are, and that's what we're looking for. So let's kind of go ahead and look at pre-market movers. One thing that I looked at last night that really stood out to me was that that Norwegian cruise line actually raised some cash in the capital markets. We talked about the debt markets in the podcast 2 podcasts ago about bond sales and everything like that. So with that being said, they actually raised cash without a bailout, which is actually nice. So I mean, I still don't want to buy any cruises. With that being said, but again, it's showing you that these companies can raise money. There's actually an appetite for high yielding corporate debt. So again, the credit markets are really telling you that there is some demand out there. So companies can borrow their way out. I mean, if that's not a way of vote of confidence, if you think about it, you're thinking about investors are saying, okay, we're willing to lend you money knowing the fact that you're going to bounce back. Like that's a really good sign. You wouldn't lend money to a company or or buy their bonds if you didn't think they would bounce back. So forward thinking again, guys. That I think the stock market is really looking to Q3, Q4 now instead of current levels now. Remember, when you're buying a stock, you're not buying it from past performance. You're buying it on future performance. So this is why Disney didn't tank after hours. Yeah, it fell about 2%. But I think it's holding on to that level that everyone's kind of looking at. If we're looking at Disney, I'm personally looking at 95. 95 seems to be the level that I want to buy in. I'm a shareholder, and we're basically, God, we're almost green after that earnings report. I mean, it's at 97, and you're probably wondering why, but they had a horrific quarter, 97% down in revenue from last year, same quarter. But again, the investors are thinking forward. They're thinking that is the worst over. Will this last another year? Will this last another 2 quarters? Theme parks will reopen up. I think what you're getting is a lot of optimism for the future. They're not pricing in Q3 in a sense. I think they're pricing in Q4. And that the Fed is going to have our back, and people will go out again, and people will still do what they got to do, to be sociable again, right? That's kind of the deal. So let's look at names pre-market and what I think about them. Beyond Meat, again, that's boosting up with that meat shortage that we're having with Tyson Foods and all that. I don't own Beyond Meat. I don't see owning Beyond Meat. Could be just one of those quick reactions to the earnings report. For me, I'd have to break 117 before we even think about buying calls on that name. It is a very volatile one. Activision Blizzard is a name I really liked. I think the Call of Duty deal, what they're having with the free was Warzone. I don't get to play as much, but I know a lot of my friends do. But that's big. They actually did it at the perfect time. I think Activision is absolutely a buy here. I think they're great. I think they'll continue to grow moving forward. I may maybe looking into buying a position in that stock because I do like it. Let's take a look at some names. Norwegian Cruise Line, again, boosted by that bond offering. 12% coupon, a little high, but that's high yield debt for you. But I think they raised about what? I think about $1 billion, $2 billion, or $3 billion, excuse me. And so that's really strong. Carnival is moving up in sympathy of that. General Motors, pretty decent quarter. They beat their expectations. They're up nicely. Airlines kind of treading water, but Delta's up 1%. Occidental, even after a really weak quarter, is bouncing back. CVS, strong quarter, up 3%. Remember, CVS Health now because they merged with Aetna. Banks are up nicely, which is nice to see. There's a couple of things I want to see when it comes to any kind of recovery or any kind of forward thinking of optimism. I really want the banks to participate because relative to the S&P, they have been very weak. I'm an owner of JPM, and that's probably my 8th largest position in my portfolio. I like them long term. I think banks, this isn't the financial crisis where it was credit issues. This is literally just the COVID thing. But banks are still going to be viable and come around. They still pay dividend. I don't see them ever canceling their dividend or suspending their dividend the way like a Disney would. So that's my thinking is. Let's go ahead and answer some questions. James says, I need more stimulus money to buy Tesla 1100 calls. And ADP had the worst payroll numbers. They did. ADP literally had the worst payroll numbers in its recorded history today. 20 million jobs lost, but yet the stock market is up. Why is that? That's probably very frustrating to know. Like, how the hell is the market up and off the bottom? The market should be tanking. Again, guys, remember, forward thinking. The market is pricing in Q3 and Q4. ADP is really just responding to what happened recently. So again, if you think that we're going to have 20, 40, 60 million people unemployed for the next 2 quarters, yeah, then you think stocks are overbought. But I mean, if you think that we're slowly going to get a recovery, a vaccine, or this is just the new normal, I mean, I really do believe that things will bottom out. I hate to say this, but I mean, I hate to be this guy, but I really think the worst is past. I really do. I think that, we just have to be careful in order to reopen things, obviously, but the fact that, the worst of the economy, not in the sense of the illness, but I think the worst of the economy is here. And we'll gradually move as we go along. So again, I'm still bullish on America. I'm bullish on the market as I am an investor. ATVI, let's go and take a look at that. Paul's asking what's your buying level on ATVI. Let's go and take a look at that. Again, tapping all-time highs. It is at all-time highs pre-market. So again, you have to kind of scale in here. I mean, we got to see how we get in the morning. I don't know if I'm going to buy in right away. I want to kind of see the price action before it goes. I would like to kind of get in before 75, but I'm going to go and do some research on here on ATBI. We could do that together. Let me go ahead and get my. Let's go ahead and do this here. We'll go ahead and take a look at Yahoo Finance. I'll start looking at some numbers in regards to ATBI. I kind of look at their price to earnings and all that good stuff. Let's see if it makes it a viable investment for our investment club and all of us. But again, I hate to be so adding to more tech, but ATBI is that stay-home economy type name that you do want to own if you think things are going to get worse moving forward. So let's go ahead and look it up. If I can just get this to load. There you go. All right, let's kind of look at their names. So EPS, we know that they're 33 PE. That's a little expensive. So keep in mind, market multiple right now is really at 20. So that's one other thing I wanted to look at Disney. Disney, if you're trading at a market multiple of 20, it really is at $110 stock. But yet it's trading at what now? 101. So you're really just playing a discount. So the COVID is discounting what's going on with Disney. So again, like I said, forward earnings. Looking at Activision Blizzard, they do pay a dividend, about a 0.60 yield. So you're not buying this for yield. They do give you some cash, which is nice. It's nice long term, but the PE ratio is a little high. Let's go ahead and take a look at some of their financials. If I can bring this up. So revenue here, see operating expenses and loss, gross profit, pretty strong profit, that's for sure. Total revenue's up. Yeah, you can see kind of the growth in, 2018 they actually had better revenue. So you could see 2013, the year of 2019 kind of lower. Profit is lower too, cost of revenue is kind of down. So you're kind of getting a little bit of a fallback here, but yet the stock is up, obviously due to COVID. So let's take a look here at net income, 1.5 billion, 1.8 billion. So net income is down 2018 to 2019. So we just have to look at 2020 currently. But good cash flow here, operating cash flow. So they're very cash heavy. That's something I really do like. Let's go ahead and take a look at profile for them. Oh, let's go ahead and let me go ahead and bring up, actually I'm not a big fan of Yahoo Finance. Let me take a look at TD Ameritrade and see if I can get a little more breakdown here. Give me a second, Chief. Let's see if this works now. Okay, can you guys hear me now? I want to make sure that I think my OBS went ahead and restarted on me. Okay, so I guess it does say I'm live, which is good news. But yeah, I agree, dividend apparel again. I think that kind of chatter kind of spooked the market. Mushir Rama, what's the name of your foot massager? I want to get one. God, I don't think I have the box for it. I don't have the box for it, but it's a shiatsu massager. Oh, it's called Reflex 5S Foot and Calf Massager. So I hope you heard that. But that's where we are. So that's some of the names I'm looking for, guys. Moving forward. Again, I'm expecting another bull run today. This market looks very nice across the board. Let's see if we get some continuation. I do have some calls with the team, so it's just gonna go ahead and take some time to go. So I have some Tesla calls. I have some Apple calls that I'm still holding. I have Netflix calls and I have Facebook calls. That's what I'm holding personally. And we took a little bit of a hit with that Clarida comment, but we are responding back, which is nice. But again, options trading this week has not been easy. We already got 2 winners on the board, but again, it's going to take some time to move on to get there. So we'll get there. I mean, it's just been a rough one. It's been a rough couple of weeks. I mean, for all traders, guys, hasn't been easy. Do I still like Uber long term? Absolutely. I still like Uber long term, and I am a holder of the stock. And the question was, still a good time to jump into Tesla? As an investment, absolutely. Absolutely. I own stock, and I like it. We're still hovering at that 100-day moving average. Let's see if we get a push above 817. We just need a $20 move. Right now, it is up about $20 pre-market, so we need another $40. So let's see if we get the continuation. Thoughts on Macy's? I would stay away, Paul. Really stay away from Macy's. So that's something I could tell you. Just stay away. Watching some names here. Looks like Apple looks like it wants to retest that 20-day high, which is really good news. And Qs are bouncing as well. Looks like it wants to test that 220 level. Looks like we're getting a nice little bull run here back on ES. So again, the levels you want to look at are 28.90 on ES moving forward. If you're playing options now, keep in mind you may want to go ahead and take a look for the week after. Remember, non-farm payroll is this Friday. We just had the private payroll report. Reported this morning at 8:15. That was the 20 million job loss. So we'll go ahead and leave it there, guys. Have a great rest of your day. We'll catch you guys tomorrow for the morning note. Thanks for joining me. Make sure to like and subscribe our videos. We really do appreciate it. And we'll talk to you guys soon.